Welcome to the show. I'll be here the rest of the week. There's a 2-drink minimum on Friday, though. So, what day in the world is it? It's, I don't even know what day of the week. Is it Tuesday? It's Tuesday, May 16th, 2017. This is Daily Forex Trading Strategy Session. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble. Focus on the long term and never risk money you cannot afford to lose. Guess what I got today, or last night? Let's see if this will work. Whoa! Check this out. Oh! Oh! Bang! Bang! Hang on. Oh! Okay, put it up here. Oh! Look at that. Steel. Oh, what is that? What? Look at that PC, huh? What? That's the inside. Whew. Now if it'll only work, huh? Now if it'll only run a webinar, we'd all be happy. Yeah, horse knows, right? It's, yeah, I don't know, but it's beautiful inside, huh? You're looking, you're like, what is that? Yeah, even the guys that were working on the OS, they're like, oh, what is that? So anyways, yeah, fun, huh? Yeah. Yeah, Horse has one. But the thing is, you know, you've seen it, like it works on and off, and, you know, it's so powerful, but it can't run Adobe Flash. Like, you know, could be a problem. Who said it was a man, Mickey? All right, let's put the video. Puts me in a happy mood. So I already wrote the disclaimer, so I can just say hello, hello, hello. Cool. Yeah, so anyways, yeah, who said it was pretty funny though, because she's like, oh, I'm on my way to the city, can I call you from the car? And she's like, because she's being chauffeured, right? I'm like, I don't know. That depends. Is it a Bentley or is it a Rolls Royce? And she said it was a Jaguar. I said, well, forget it then. She laughed. But oh dear, really? God forbid, Jaguar. So, anyways, all right. So let's get going. Hallelujah. All right. What does one do with this? Well, if you're a bull, you know, theoretically, right, there was a buy in here. But remember, to me, it's more neutral, especially if you're a bear. But this last week was an exit, right? So let's actually include this a little bit. That's of course one click too many, and that's one click not enough. But anyways, bears started last week at a sell zone. Anybody that knows how to swing trade knows that. The target is right in here. Done. That's where you get up. Cool. If you didn't get out, you pay the penalty. Okay? You can see a lot of people exited Friday afternoon. Why? It's Friday afternoon. You can see this is probably London close. All right, so anyways, is there something that you can learn here? Is there something that you can use to program your brain? It was on sell zone Monday morning, and at Friday, London close, it finally reversed. What happened? What's the reason? Yeah. But isn't that what's supposed to happen? No, actually, they're supposed to happen earlier, but you notice that no one until that moment bought, right? But anyways, so last week, based on the open, the projected low was this area here, this green area. Great. So, and then right at the end of the week, at the London close, people took profit because they're supposed to. Can we agree to that? Okay, so I want you to consider it fact. In reality, we don't really know, but consider it fact. Write it down if you have to, and put it in your brain as not something that's subjective. It's factual. That's what happened. That's what's going to continue to happen in the future. Those who sold because it was the place to sell at the time to sell it. Right? And then they took profit. I think they took profit late. But whatever. But they did take profit at the last minute. Right? All right, fine. Now, so now maybe some bulls get on board, right? So Sunday afternoon, or Monday morning, depending on where you are. Sunday morning for me. The market's open, and there's a bullish setup for a bull. It won't make you a bull, but if you're a bull, that's what you'd be looking for. You might use the moving averages as a stop loss placement and so on and so forth, but that's what you'd look for. And what was your projected target Sunday afternoon if you were a bull? Yeah, 110.65. Or sorry, 110.67. Okay. What's the actual top? Oh, well, we missed it. We didn't hit the top. We didn't hit 67. It's funny, I still do that though. Dealbook 360 would pop up the data on it. What do you have to do on this one? Yeah, you gotta do this. Still doesn't tell you, does it? Anyways, I guess you can go there. Is that 65? It hit 65, not 67? High 65.3. Wow. 1.7 pips off. That's totally unacceptable. Right? Look at this, I can't even fit it on the chart now if I do it this time frame. maybe 5-minute chart. Them a lot of candles. But anyways. So now they're high risk pips. If you're going to stay bullish, they're high risk. I'm not saying you have to be bearish. Nobody said anything about that. But if you're still a bull, you now have additional risk. And I think it's your job to mitigate risk, or at least address risk, or at the very, very least, recognize risk. Yes, all right, so our Tim says WR2, right? Well, okay, yes. Okay, so let's be careful of what we're doing, of what we're saying. So let me say it differently. Okay. The WM4 is always, in every case, your conservative target. So don't tell me like, oh, it's supposed to go to WR2. No, it could, it probably will. But the conservative target is WM4. So for example, what if at this point you took half your profit and you left the other half run to WR2? Okay? Okay, so like for example, you're up 100 pips. Are you really going to risk the 100 pips to maybe get the other 40? How much is it worth? So if you're using math, what you would do is look at your expected return from both scenarios. You would look at your expected loss if it did retrace from here, okay? And then you would randomize the probabilities between WM4 and WR2 so that the two different strategies of get out now or hold to later are equal. And that'll give you the probability of your risk-reward scenario, so you have to do two different equations. And then find the probability between the two and such that they were equal, right? And then you'll find that, you know, there are different sort of strategies in which you would want to consider. And one of them would be, well, there might be a fairly high probability that this doesn't go to R2. It can go to WR2. But at the very least, on the long run, if you took half your profits at the first level of serious resistance, is it really that bad of a thing on the long run? Okay? So, right? So, you bring up a really good topic. Yes, that ultimately, this should be the target. Okay, it should. But life ain't fair, is it? So there's a point in which Newtonian physics breaks down in a market of society, right? So this is where sort of behavioral finance would get very interesting. And I've been reading some breakthroughs that they're having in behavioral finance and behavioral economics and stuff. And I think it'd be a fascinating, you know, I don't know, PhD or something, right? I don't know. But this idea, there was an idea in the past where everybody's rational. Do you believe that's true? Everyone in the market is rational? It's what they teach in school. Yeah, not a chance, right? That's retarded. That's why they teach it in school, right? So then the opposite of that would be, right, everyone is irrational. And that's something that's been studied maybe the last 20 years, right? The opposite side where everybody's irrational. Now, do you think that's true? Yeah, I don't think that's true either, right? So there's like, let's take a random dude in the world who's got, you know, some basic resources. He's not a fool. He's got some education. He's got some money, right? Is he saving for retirement? Yeah, probably. Does he love his children? Yeah. Does he want to send them to a good school? Sure. Is he saving for that? Yeah, probably. Does he live in a half-decent neighborhood? Yeah. You know, does he like cars? Yeah. Does he like pretty girls? Yeah. You know, all the, you know, you can like tweak and say, well, he doesn't like girls at all, right? And all that. But, you know, like, here's like a normal person, right? And what do they want in life? Well, they want to live comfortably. They want to work less. They want to enjoy life more. They wish they had some more money, all that kind of stuff, right? And I think the vast majority of the time, they're quite rational. But along the way, humans tend to make mistakes. When is it time to put grandma in the old folks' home? Oh, I don't want to put grandma in the old folks' home. Well, an emotional response, right? So on and so forth, right? We tend to, at times, be rational, but at other times, be irrational. So why is it like, for example, people buy at the top of the market and they sell at the bottom of the market? Well, you know, that's where lack of knowledge, but also an increase in emotion, right? So I think that somewhere in the behavioral finance of everything there's a mix, right? So there is a rational argument here to at least take some of your profit off. Now, an irrational person may hope it goes to R2, and an irrational person might, well, they might have gotten out somewhere that made no sense, right? So what's sort of the hybrid of irrational and emotional? Well, you know, that WR4 is an important pivot in normal market conditions. Okay? Great. In these market conditions, the market opened quite bullish and should probably, supposed to, kind of, would hope it would go to WR2. If you're a bull. But what if you're not actually a bull? What if the market's going up, you're buying, but you're not actually a bull? You can do it. You can be short-term long, but long-term short. So you might say, well, look, I know it's going to go up this week. I can see it. I got it. Lots of profit taking last week. There's just no bears left. Got it. Okay? Goes up. Great. Now what? Do the bulls have the conviction to take it higher? Are we going to break 111? Or sorry, 110. Are we going to, no, it is 111, right? Are we going to break 111, yes or no? Is it clear? Cash, it's all valuable, man. It's all valuable. Whatever helps you make a decision. I don't think there's good or bad. Okay? But that's what we're talking out here. So, but like, I don't get caught up on candles because by that time the candles happened, other informed, or let's say other better informed people have already acted. So you're always behind people that knew what they were going to do before it happened. You see what I mean? Well, Horace, for example, you can look at longer term charts. But also, more importantly, Horace, it's your bias that is the ultimate filter. You can watch this go up and just say, whoa, dude, nobody's buying this. Okay? So it can be opinion. Okay? Longer term charts, commitment and traders report, you should review that every Monday or even Friday afternoon when it comes out. Okay? So, for example, guys, if you were not a bull, okay, but you were long and making money, I would, if it were me, tend to be happy to get out at WM4 because I just don't believe it's going to go higher. I just don't believe it's going to break 111. I just don't believe there's that many bulls. See, I believe that somebody sold this right where they were supposed to and got out right where they're supposed to. And then what are they going to do again? Sell at the next level of resistance. Okay? Now, I might be wrong, but that's okay, especially if I'm taking profit at WM4 and I'm done, right? You see what I mean? Pete says 111 could happen, but who knows? Well, then that means no to me. Okay? Right? You're certain or you're uncertain. That's it. Right? And try not, like, just for everybody. Just for everybody. Ignore the fact that you might have like a $2,000 trading account. Okay? What if it was 200 million? Okay? And every time a pip ticks, you make or lose $50,000. Every pip was worth $50,000. How would you behave now? You're like, dude, right? You're up $5 million and you're like, no, maybe it'll go higher. Right? You're like, it's $5 million. Right? So, that's how I want you to. And by the way, that reminds me. Did anybody take me up on my advice 2 months ago to create a $1 billion portfolio? Where I asked you to pretend I invested $1 billion into your hedge fund and you're going to come up with a business plan? Yeah, good. Right? And I want to know specific investments and rationale for each, like why would you do here and why would you do there? Who knows? Maybe I have $1 billion in my closet, and I just like, oh, what am I going to do with this? Oh, I'll give it to Horace. Cool. Working on it. Yeah, working on it. Okay, cool. So anyways, just have the outer body experience and say, well, what is the conservative thing here? So look, if you're a bull Euro USD, by all means go for WR2. You'll notice it's also a monthly pivot. Cool. If you're not a bull, then you need to treat it like it's an opportunity to take profit. Is it an opportunity to sell? No. The reason for that is, first of all, you don't have a reversal pattern. You don't have a lower low. But also, if you go back a few weeks, it kind of looked, well, this higher high prevents you from making that, right? So if it was a downtrend, by all means, right? But it's not really a downtrend technically because we have a higher high. Okay? So it's not an opportunity to sell per se, maybe scalp, but that's a whole different story. Right? So, if you were a bull, you could always take half your profit, have it come down here on the roll reversal, and then put that half back here. Hey, it's 30, 40 pips, man. Okay? So anyways, the point here is nobody knows. I don't know. You don't know. But the risk of a potential significant retracement and or reversal could start there. Right? Well, Artem, if you're a bear, you need a reversal pattern, bare minimum, right? What's the simplest reversal pattern? Double top, followed by a 1, 2, 3. Because you can take the double top and then add a second on the 1, 2, 3. Because every 1, 2, 3 has a double top. Okay, you see? So good talk. Good talk. Good talk. High five, everybody. All right. So that's that. Kiwi. So we have this doing this last week. And, well, you can see there's still definitely a cluster there. Okay. So a bear would sell that. And a bull would sell that. And what's left? Bulls, bears, who's in the middle? Pigs! What happens to pigs? Pigs get slaughtered, yes. Thank you, Ryan. Dude, I don't have a watch, man. It keeps bugging me. I got all these broken watches. Yeah, bacon! I smell bacon! Broken watches, man, everywhere. I walk around the house, there's broken watches everywhere. I can't. Bad place for a picnic, yeah, well said. Nomad's land. All right. I want to spend money on another watch. So I know that says pound Kiwi. Don't be fooled. It's USD yen. It's a dangerous place. Peter, I plan every webinar to the minute, Peter. But feel free to ask, and I'll see what I can do. But I'm on a pretty tight schedule, man. Oh, maybe. Yeah, well, I don't remember the last time you bought me cigars there, Pete. I don't know. Thought I'd do Swiss franc today. All right. So this is USD yen. We're toppish. We're toppish. Very, very toppish. And it makes it clear as mud. People are trading it technically, but people is stupid. It's actually something I'm teaching my children, and I think it's quite fun. I think it deserves its own t-shirt. What do you think? People is stupid? I think it says a lot. There's like, yeah, there's a whole PhD thesis in that one. So anyways, that's kind of how it looks. I mean, you might maybe a pitchfork it this way. You know, if you had the pitchfork, come on, okay. If you had it this way, now you've adjusted it, you know, kind of thing. But the point is, we're at monthly target, and it's made a higher low, but after a lower low on a smaller time frame. You see it? Double top, 1, 2, 3. And that would make sense only in this area here. Okay? This pattern is something we would have expected weeks ago. So somebody asked about like the reversal patterns or candlestick patterns and stuff. Well, candlestick patterns are potentially helpful if, like back here, you said up here you'd get a double top, and then based on that you get a 1, 2, 3. So some people are like staring at candlestick patterns. Oh, is that a bearish engulfing candle? And they sell because they see the bearish engulfing candle. And that's just stupid, for, you know, to say it without any sort of poetic justice, right? Okay, no, that's dumb. Now, if you said, well, it should reverse up in here, so therefore, around this pivot cluster of weekly R2 at the monthly R2, I would expect to see a double top with a lower low, lower high, lower low, lower high, lower low, lower high, lower. And so you're thinking about it, you know, well in advance, days, and a week or two in advance. You're expecting to see the candlestick patterns. Then yeah, because if you're not at those levels, then your candlestick patterns are irrelevant. Okay. Okay. So this started down here, double top, 1, 2, 3. Or sorry, double bottom, 1, 2, 3. Now here it's double top, 1, 2, 3. So maybe, just maybe. Remember, it doesn't have to come down. The fundamentals dictate what it's going to do. But that's where you would expect at least people to take profit, bare minimum. What happens after that? Well, it really depends fundamentally. See, it's less predictable. If the predictable stuff happened, then what happens next is less predictable. Okay? But would a bull sell? No, bulls don't sell. Okay, that be that. So I've told somebody, as you know, that the bottom will be 12.17. Yesterday it went to 12.37. $20 an ounce. That's a lot of money if you have, I don't know, 100 metric tons. That's a lot of ounces times 20 bucks. So anyways, cool, man, cool beans. The thing is, I do believe it's going to continue to be a bearish, but all I suggested was 12.17 would be the lowest price of the month. So to magically get a $20 rally off of 12.17 makes me feel really good. At least makes me look really good. Right? I might be sick, but I'm pretty. And that's all that matters. That's why they named me Vain. All right. Yeah, it gets complicated, Peter, and every commodity has a different contract size, and they have different formulas. Like I'm trying to think of what was it for the S&P 500 bigs. It's the price of the index times the number of contracts times the multiplier, which I've forgotten now what the multiplier is. Yeah, it's convoluted for sure. Does anybody remember the multiplier for the S&P 500? Well, Peter, do this. Just open a demo account, throw down a sample trade, see what it adds up to in your comfort level. You know, what you want to look at is your margin cost, for example, but also what a pip or a tick is worth to you. Because, like, for example, let's just compare two currencies. You know, a lot of people in the past have told me they would never even consider the USD Mexican peso. I used to get this all the time. Wouldn't consider it in a million years. I'm like, well, why not? Oh, well, the spread's like 30 pips. Yeah? Oh, I could just never trade it with 30 pips. I'm like, well, your euro dollar trade is trading at $3 a tick, and your USD Mexican peso is trading at 30 cents a tick. So it's about the same as your Euro USD trade that you do all day, every day. Oh, really? Yeah, this just turns out the Mexican peso is worth a lot less than US dollar. Newsflash, right? So anyways, so just, yeah. That's the way to do it. Cash, it's a big market. Okay? Just imagine thousands of banks negotiating price in real time. How about this? How is the value of a car calculated at a car auction? Well, the audience, right? Based on the bids. And is it in everyone's best interest to have a low price? Everybody there wants a low price. But if you've ever been to a car auction, it's filled with idiots paying way too much money for cars that are crappy. Right? They probably haven't even driven the cars. You're like, $7,000 for that? Dude, they're selling on the newspaper for $6,000. I can get that on eBay Motors for $5,500, and this idiot over here just paid $7,000. But that's the market price. Right? Well, they've accumulated orders over the weekend, Cash. Do they execute those orders? right? So like over the weekend, so-and-so has been elected, and you're like, oh no, that's going to affect the XYZ. So you call your broker, and you're like, dude, get me on the XYZ. And he's like, all right, well, we'll put that in Monday morning. So when the bank's open, there's all these sell orders, there are all these buy orders, and boom, instant execution. No, it's just, again, you know, all the buy orders, all the sell orders, oops, this way. And if there are more buy orders, the market opens this way. If they've accumulated more sell orders over the weekend, then the market opens this way. And if it's about the same, the market goes, no. Okay? Just look at it as accumulation of orders over the weekend. And, oh, I want to do oil. And then we'll do our beast or pig. We'll do the Great British Pig, and then we'll get out of here. Okay? Oil opened up hot. We talked about this Monday. Seems like a million years ago. That was yesterday, I suppose. Talked about this yesterday. The only way you could trade it is using moving averages, but you still have to use the pivots as targets. If it wasn't this, it was something else, but do you remember that discussion? I don't know if it was crude oil, but same idea. No? All right, well, in that case, if it opens hot and you're still a bull, you got to buy it off the moving averages, but you still have to respect the target. Oh, USD kitty cat. All right. So you can see that it was reasonable advice. So in that case, now what? Well, I wouldn't be a buyer up here even if I was a bull. Now remember, I was a bull at $44.30. Let's get rid of that. That's old. $44.30 was down there. 44.30 is about there. Oh, yep. Now, is that right, or am I making that up? 44.30. Right? But like 3 weeks in advance, right? Now, I think at one point it was a little higher, but then we got new pivots, so I adjusted. But whatever. All right, so what do you do here if you're a bull? Well, probably take profit. Do you think it'll go higher? Yeah, I think it can. Do you think the psychological level of $50 right next to the weekly extreme target could possibly be a confluence that would impact, or let's say impede, prices from rising further this week? Or it doesn't even have to do that. Should you respect the weekly R2 $50 a barrel psychological level? Okay. Cool. So remember, one thing you may plan on is something like this now. Because I think it could go to 55. Okay. Well, also though, Ryan, remember, I think this is mostly fundamental, not technical. So I make my decisions first and foremost on the fundamentals, and then look at the, right? So to go back to the old conversations, I felt like it should fall because that's what the fundamental trend was. And then you look at the chart and say, well, $44.30 is the pivot. Cool. But then, based on things like potential OPEC meetings, improving macroeconomics globally, and our historic analysis of inventory data would suggest drawdowns in inventories occurring around the June 1st period. And we did discuss it all the way down, that somewhere around here, it would be time for it to go all the way back to $55. Like eventually, it probably will go this high again. So the trick here now is if you're using your monthlies, don't go too technical to say, well, because it reversed at the monthly low, that it should go back to the central. Like, we're hoping it does, and it can, but we got to be cautious because this is even more a fundamental play. There's a lot of people staring at this, at these psych levels and the news, and there's a lot of emotion tied up into here. So don't be entirely too rational, because what will end up happening is you're outsmarting the market, and that'll get you spanked. So just know it. Don't ignore it. It's all good. But let the market do what it wants to do. Right? The best play might have been just to buy it at 44 and walk away. Yeah, it's a very much fundamental thing. Like, think about the percentage of the market that may buy oil and or oil futures or derivatives, therefore, especially if you're doing crack spreads and stuff, that may not even look at a chart. Okay? Yeah, so just, it's helpful to think of it as an industry and not as a chart. And I'm not saying you do, but I'm just saying, think even bigger, right? Think about industries and refineries and all that kind of stuff. There's some interesting things going on. Now, long term, I am a bear. If it goes up to 55 or 60, I would love to sell it. I was looking at the numbers. Did you know the number of oil rigs in the Gulf of Mexico doubled in the last 12 months? Double! And yet, when you read the news and stuff, they keep talking about frackers, right? Is it possible that the media is not that intelligent? Maybe. I'm not dismissing fracking, but when you add 450 more rigs in the Gulf of Mexico, seems to me that might be a lot of oil too, right? Okay, and then, what's going to happen next year? Do you think they're going to double again? Yeah, Rob, I'm not saying they're wrong. I'm just saying they're slightly misinformed maybe, right? No, listen, guys, to double again, right, would be impossible. Well, I shouldn't say impossible, but to add 400 rigs this year, do you think they're going to add 800 rigs next year? Because the more they add, the lower they decrease the price, and the less likely they would add more rigs. You see what I mean? By adding more rigs, they're depressing their own price, therefore removing the incentive to add more rigs. So there's going to be a slowdown. I'm thinking. I'm predicting. I'm thinking about predicting. And all of a sudden you'll hear on CNBC, there's a 50% decline in the number of rigs being added. But then, again, right, if there's a slowdown by 50%, then we'll only add like 200, 250 new rigs next year, right? So, you see what I mean? Which is still more. But the story will be different. The story will be the dramatic slowdown. Okay? And then how about this? Have you guys been watching the numbers? So, 2 weeks ago, I took you to the EIA and the IAE websites regarding oil. Now, I'm sure you downloaded a lot of details from these, and therefore you're aware of the very, 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 very significant decline in money invested into exploration. And that probably 5 years from now, we will actually be running behind on known supplies. So, like, do you think the world economy is getting better? Like, is China getting better? Is Japan getting better? Is the United States getting better? Is Canada getting better? Is Europe getting better? Economically speaking. Are things going to be worse next year than 2 years ago? Okay, this is your thought process. So if we continue that trend for the next 2, 3, 4 years, what would that do to demand for oil supplies? And if there's no incentive to find more supply today, how will that impact things 5 years from now if we're on a trend of increased demand? We do draw down what we have in inventory, and all of a sudden we'll go, uh-oh, we don't have enough supply, or whatever, proven reserves, right? So, at some point, I think, whether it's 5 years from now or 10 years from now, maybe we don't have enough oil. But it could be 10 years. It could be 10 years. And here's the other thing about fracking that a lot of people don't talk about. Fracking doesn't last very long. It's like a light switch. You turn it on, and in 2, 3 weeks, you're pumping oil. Then all of a sudden, you're out, right? And you probably pump a bunch of nat gas down there, tap it off, come back, and nat gas prices go up. So you're like, it can come and go very quickly. Yeah, in the 10-year, Horace says, yeah, everyone will have electric cars and, jet packs and stuff. Yeah, all right. Tesla still won't be profitable, but Amazon will be. All right, so I got to do a relative strength exercise for the pig. Yeah, we still won't understand diabetes in 10 years. You're like, really? Three of these things belong together. Three of these things are one and the same. But one of these things don't belong here. Now it's time to play our game. It's time to play our game. All right, so we're looking at a relative strength exercise here. Pig should be in every one of these. And we're trying to figure out which ones are the same and if there are any that are different. Let's back them all up. All right. Okay. seems to me pound yen is most bullish. And what we're looking at, by the way, just to make it clear, the pound is on the left-hand side of every one of these currency pairs. So if they are exactly the same, all four will be going up, or all four will be going down, and they'd be going up or down at the same rate. If they are going different directions or in the same direction at a different rate, then this will not be the British pound's fault. This will have to do with the other currency pair. So for example, if three of these things were going up, pound would be stronger than the other currencies. And if one of these pairs was going straight down, then the pound we know is strong against three, but the other currency is even stronger than the pound. And this is called relative strength. So what I did is these are all 1 hour charts, and I backed out is maximum. So we're looking at the same time frame from the same distance, right? And this is important even to Einstein, right? It's all relative to the observable. So we're observing from the same viewing point, okay? So pound generally stronger than the dollar, pound strength generally stronger than the yen, pound generally stronger than the Kiwi, pound generally stronger than the Swiss franc, except, wow, the last week, right, from last Tuesday to this Tuesday to today, looks like Swiss franc way stronger. Over that period, yen a little bit stronger. Over that period, no change in Kiwi and no change versus the dollar. So what have we learned? Pound dollar and pound Kiwi are about the same. So pound, dollar, and Kiwi are essentially neutral. Yen is a little bit stronger than the pound, the dollar, and the Kiwi. And the Swiss franc is much, much stronger than the yen, the dollar, the Kiwi, and the pound. Therefore, the strongest currency is Swiss franc, and the weakest one, well, is a tie between dollar, pound, and Kiwi. So you'd be a fool to be trading pound dollar, pound Kiwi, Kiwi dollar, or Swiss franc yen, because they're all about the same. Right? You might be making a little bit of money on the Swiss franc yen trade if you're long, but there are better trades to be on relative to those. Okay? High five. That was awesome, huh? High five. Boom. So a lot of times people ask me, they're like, Wayne, is it really necessary to have all those screens? Well, when you can go, and you made that analysis. Okay? Why Swiss franc, though? It's a risk-off currency. So is yen. And that's why yen is relatively strong, too. So the two strong currencies are, yen is strong, let's do it this way, yen is strong, the Swiss franc is stronger, but they're both strong. Cash, what do you do when you're not so sure about the near future and you're a crazy bajillionaire? Well, when you're not so sure, you fill suitcases full of gold and diamonds and cash, meaning dollars, and you get in your jet plane and you fly to Zurich with your entourage. You and your entourage walk into your Swiss bank and you go, and some guy brings over a metal suitcase and goes, there's your gold. And another guy goes up and opens his metal suitcase and it's diamonds. And the next guy goes up and he opens his metal and it's just $100 bills. and then another one of $100 bills, and another one of $100 bills, and another one with $100 bills, and you stuff it in your Swiss bank account, and you walk away. So now imagine you just do that with financial instruments instead, and it's all converted to Swiss franc, and then Swiss franc gets strong. But just imagine the billionaire flying to Zurich because he's pretty scared that the stock market is going to drop over the summer. Is that reasonable, do you think, guys? That's as soon as we're past the June Fed meeting, there's a big sort of stagnation for 8 to 10 weeks. Good time to visit Zurich. I love Zurich in the summer. Beautiful. So anyways, hey, peace on earth. May the pips be with you. May your profits be above average. Today's Tuesday, so let me check my schedule. Yeah, I'll be here tomorrow. Will you be here as well? Great. Well, don't be a scumbag and open up an account to TradersWay.com. All right? Peter, it takes me about an hour to get it up to YouTube and then over to Forex.Today. Okay? So anyways, guys, I want to thank you for being on my team, honestly. Thank you. And I'm here to help, and I hope I'm helping. But, I appreciate you, and I want the best for you. So I'll see you tomorrow, huh? Maybe I'll have my rig up. See you then, guys.